Donald Trump's tax plan and what it means for you. He's made some really bold claims, including getting rid of income taxes altogether. But how realistic is that, and what does his tax plan actually include? Here's what he proposed this week, how it could impact you, your wallet, and the economy as a whole. One of Trump's more radical ideas is eliminating federal income taxes entirely. While no formal policy has been released on this yet, he has floated the idea of replacing income tax with tariffs and other forms of taxation. The challenge here is that income tax makes up about 50% of federal revenue. Removing it without an alternative would leave a massive funding gap for things like Social Security, Medicare, and the military. Trump has proposed eliminating federal income taxes on Social Security benefits, which would put more money in the pockets of retirees. While this would be a welcome change for seniors, it's estimated to cost the government over $1.2 trillion over the next 10 years, further contributing to the national debt. He wants to lower the corporate tax rate from 21% to 20% and even down to 15% for companies that manufacture in the U.S. The goal here is to encourage domestic production and create jobs, but critics argue this could lead to massive losses in federal revenue without guaranteeing economic growth. Trump wants to exempt tips and overtime pay from federal income taxes, allowing workers in the service industry and those working extra hours to keep more of their earnings. This could boost take-home pay for millions of workers, but it would reduce tax revenue by at least $118 billion over 10 years, potentially forcing the government to make cuts elsewhere. One possible way Trump has suggested offsetting all these tax cuts is a universal baseline tariff on 10 to 20% of all imported goods. The idea is to bring manufacturing back to the U.S. and reduce reliance on foreign products. However, this would increase prices for American consumers and risk trade wars with major partners like China and the EU. If all of these tax plans were implemented, it could increase the federal deficit by $7.5 trillion over the next decade. Supporters argue this would lead to economic growth, while critics argue this would cause inflation, higher interest rates, and major budget cuts down the line. His tax plan is very ambitious and in many cases economically untested. If all of this happens, would tariffs and corporate tax cuts be enough to fund the U.S. government? Or would we see major spending cuts that affect everyday Americans? What do you think? Would you support lower or even zero income taxes even if it meant higher prices on everyday items? Let me know in the comments.